Kia ora koutou katoa. I'm Janaea Clark, Financial Wellbeing Champion for Cambridge Partners. And today I'm joined by our Head of Growth and Advisory, James Howard. We're introducing this new format to deliver you our insights on investment themes that relate to the current market. In this issue, our theme is volatility, the ups and downs in the market, something our clients and other investors have been experiencing a lot of over the last couple of months. We hope you find this informative and we'd love to hear your feedback. So James, welcome. Can you start by telling us a little bit about what's causing all this volatility?
Thanks, Janaea. Yes, investors have experienced some increased volatility over the last couple of months in the beginning of 2022. We've had the ongoing pressures from the COVID-19 pandemic, which continues to develop around the world and impact both economies and supply chains, and the uncertainty that continues to come out of that in terms of what's next. The supply chain issues in particular have impacted on inflation. And as a result of inflation, we have seen central banks around the world have to revise their monetary policy in reaction to this. And then there's been the increased interest rates from central banks in response. And there's some uncertainty around where those rates will go in the future. And then, of course, as everyone will be aware over the last couple of weeks, the developing situation in Ukraine has created a lot of uncertainty as well. I think the key for investors is to remember that we are always guided by recency bias in terms of volatility, and we have had a number of events over the last 2 or so years since the COVID outbreak happened that have caused some alarm in the markets, such as the Suez Canal incident where the ship got stuck, and also the Evergrande scare in China sort of more recently last year, and the potential impact that would have around bond markets. So volatility is always present, but we do tend to react more to recent events than those that have happened in the past.
Thanks, James. So what tools do we use to protect clients from the downside of this volatility?
Yeah, absolutely. I think that the key again is that volatility is always present when you're investing in markets, and volatility is heightened, due to events that unfold. But really, the key and the key here at Cambridge Partners is about having a long-term plan, and working towards that long-term plan and holding whatever's happening in the current environment in perspective to that long-term plan. And so, of course, with investors, your risk tolerance will be able to reflect the level of risk you're willing to take on, knowing that markets are volatile. In terms of diversification, it is another key tool that we use. So diversifying across countries and markets, and also between those equities which are more volatile and fixed interest products which are less volatile. So there's a lot of things you can do to protect yourself against any short-term impacts from volatility, but always recognizing that volatility is present in the market and is part and parcel of being an investor.
So there's so many investors at the moment that are feeling like naturally anxious, watching these portfolios fall in value. What would you say to these investors?
I think that the first thing is that volatility and market events, things happening in the world can be unsettling, and it's not necessarily a bad thing to feel a little bit anxious or a little bit worried. The key is, again, to put it into perspective with what you're trying to achieve. Most investors are long-term investors. They're going to be investing for 10, 20, 30 years, and this is just a really small part of that long-term journey in terms of a time frame. And so effectively, the most important thing you can do as an investor is have a strategy and a plan that you can come back to. And, it's a really good time during these times to revisit that plan, remind yourself about what's important, what you're trying to achieve. And, if there is anything that comes up from doing that, ring your advisor and have a discussion about your portfolio, about the plan, and any thoughts that you've got to help ease your mind. But again, focusing on the long term, putting everything into perspective of that financial planning and the good financial decisions that you've made in the past is really the key.
Awesome. So you've talked a little bit about like having a long-term investment plan. What about clients that have income requirements now? They might be withdrawing funds from their portfolios. What tools do we have that might help them?
Absolutely. Good question. And I think for every investor that's in that situation, their advisor would have helped them to design the portfolio in a way that it can create that ongoing income and liquidity requirements for their needs, even if there is some market volatility. And again, the key to that is having a plan that takes into account, the risks that are present when you invest into the market, and taking a really long-term view. And when we develop our investment strategies, when we develop our investment plans and our financial modelling, we know volatility is present. We know that market downturns occur, and that's all built into the advice that we provide. So for those clients, the messaging's very similar in terms of remember that it's still a long-term journey. But if you do have any questions or there are some things that you'd like to discuss further, now's a great time to reach out to your advisor and have a discussion.
Thanks, James. This has been a great discussion that I hope our investors will find really informative. As James has said, remember you've got a solid plan and plans are made to be stuck to. But if you're feeling concerned at all, reach out to your advisor. Thanks for joining us for Cambridge Partners Market Insights. Ka kite anō.